Hey, what's up guys? Welcome back to the channel. My name is Frank Mularcik, and in this video, we're going to be doing a brief stock analysis on Realty Income stock, ticker symbol O. So the first thing that I want to look at here is just the approval of the merger. So Realty Income and VEREIT stockholders from both companies actually approved the merger of these companies. So it's sort of a merger, but it's sort of mostly it's just Realty Income is buying VEREIT. So Realty Income is valued around $27 billion and VEREIT is around $11 billion. So Realty Income is buying all of that. And basically as of August 12th, which was just about a week ago, both shareholders on both sides had agreed to that merger. So it is definitely going through. And for Realty Income shareholders, there's really not much you have to do because, as it says here, under the terms of the merger, VEREIT shareholders will receive 0.705 shares of Realty Income stock for every share of VEREIT stock they own. So that doesn't really affect, Realty Income shareholders. You'll still have the same amount of shares of Realty Income, but we'll just have the business of VEREIT under the business of Realty Income as well. So the next part I want to look at for Realty Income is, I will say their investor relations page is super great. They have all this great information about the company. Founded in 1969, they have a bunch of basic information. They are a real estate investment trust, which means they invest in real estate. That basically gives us, small-time investors a chance to invest in real estate through stocks without really having to, do all that work with real estate myself or ourselves. And that's something I really like because I've seen people close to me, I guess, deal with real estate, and sort of sometimes it's a bit of a hassle if you're just trying to, maybe do it on the side a little bit as opposed to like committing everything to it. So I think it's a good way for, people like us to get a little bit of exposure to real estate. So they have some numbers here. They list, revenues the past 6 years, which is great. Pretty much all these numbers over the last 6 years. So it's really great to be able to see, if these numbers are looking better or looking worse over time. So obviously revenues are up around 1.5, $1.6 billion, which, each year just been steadily increasing there. Same with net income. There was, a bit of a dip the last year or so, but over time, generally it's increasing. And then same with funds from operations and those adjusted funds from operations. And importantly for us shareholders, the dividends have consistently been increasing over time. And they also talk, a lot about the properties, that they have. So these number of properties here, right now they have 6,592 properties, and that's just steadily been increasing over time. Again, leasable square feet in millions. Properties acquired. So over the past year, in 2020, they acquired about 244 properties, which is significantly down from the 2 years before. But there was the pandemic, obviously, and they were struggling a little bit, like all companies were, and they probably didn't want to acquire as many properties as that. And as you can see, they definitely sold a few more properties than normal last year, and that was probably just to get a little bit more cash. And I doubt they're buying a ton of properties right now. I'm sure they're still buying some, but probably not being super aggressive in buying, just based on where the real estate market is. And they talk about the industries, just being able to have a diversification across different industries, like we saw last year. Some industries are just going to get hit really hard. So they have around 51 industries that they're involved in. And right now, or at least at the end of 2020, about 98% of their properties were occupied, which is great. That's a pretty good number, I think, at least. And the average length of leases right now is around 9 years, which is down, significantly or steadily a little bit. It's been decreasing, and I think that obviously is not as good because it's not as much commitment from the tenants, but at the same time, 9 years seems pretty good to me, and that's basically saying whenever they have a new property acquired and lease it out, that the tenant there is going to stay there on average about 9 years at least, before they have an opportunity to renew that lease. So then they talk about some financials here, and you can see, dividends in 2020 was around $2.80 per share. And one thing with REITs is that they often finance new properties. The way they get the money to acquire those properties is often through issuing more shares to shareholders, which you can see over time has diluted the amount of shares. These amount of shares in millions has steadily been going up over the past 5 or 6 years. So that is sort of a disadvantage with REITs, but at the same time, it's sort of expected across all REITs, so it's not really as big of a deal. And also looking at some of the dividend numbers on Seeking Alpha here, you can see their yield right now is around 4%, and that payout ratio around 81%, but that's not really a big deal as REITs have to pay out most of their earnings anyway. The dividend growth rate over the last 5 years is only 3.72%. They do increase that dividend usually about every quarter, but usually it's only 0.5% or 1% every quarter. So those little bits do add up, but it's still not that much growth over time. They have been growing that dividend. Seeking Alpha says 24 years, but I know for a fact that it's been at least 25, maybe even 26 years at this point, making them a dividend aristocrat, which is pretty cool. And their next dividend that will pay out will be on September 15th because they recently just paid a dividend a few days ago, actually. And we always look at the PE ratio here for the companies, but with real estate companies or real estate investment trusts on the stock market, it's often PE ratio often isn't a great metric to use, just because of some of the tax practices and the way the finances go with real estate companies. They just the earnings aren't a super reliable metric and don't really mean a whole lot about the company, but it is something to get a handle on where the valuation might be at. So right now the PE ratio for Realty Income is around $73, or not dollars, just 73, and you can see that's pretty much at an all-time high over the last 15 years. But pretty much the big reason for that is, as you can see, the earnings have gone down over the past few quarters pretty drastically as the share price has continued to climb a little bit. And looking at the sector as a whole, you can see that the real estate sector is really at an average PE of 30, which is much below Realty Income. So you could definitely argue that it's overvalued based on the PE ratio, though that is not a great method to use, but it is something to look at. And looking at the stock price, they are pretty much a high over the past year, right around $71 a share. They were definitely looking pretty nice in the $60 range, and I think that's where I would want to see it again before I keep buying. I think I've talked about this in the past, but I don't actually own Realty Income in my regular dividend investing account, and that's just because of the tax implications. So with most dividends you get, they're going to be qualified dividends, which means in most cases you're going to get or have to pay a lower income tax than you would pay on your regular wage income, for example. But with real estate investment trusts, most of the time those dividends are not qualified, so you would have to pay a higher tax rate than on most ordinary dividends. So for that reason, I just hold any real estate investment trusts I want to invest in. I just invest in those within my Roth IRA, and I haven't really talked much about my specific holdings within my Roth IRA, but Realty Income is one of the REITs that I do own in my Roth IRA, and right now I own about 26 shares, and those are valued around $1,900, and I think I get around $6 every month from Realty Income, so that's around $72 a year, which is pretty great in dividends. I think it's probably around 75 because it's a little bit more than $6 a month, so around $75 a year from this stock, which for me is pretty fantastic. I think that is a great place to be at. I definitely want to keep adding shares over time, but for me, I really haven't added any since we were in this $60 range. The only shares I've been adding are just drips. I just reinvest all the dividends I receive from Realty Income just back into that stock. So I buy a small amount of shares every month when I receive those dividends, but that's about the only shares I bought probably since, the beginning of the year, maybe January or February when it was in that $60 range. So let me know if you guys do own Realty Income. I know some people think it's a pretty good REIT. It's definitely pretty popular, but some people also, I know, have strong negative opinions on the stock and don't think it's that great. One of the reasons being for that dividend CAGR, which is one of the drawbacks for me as well, but it does have a little bit higher yield, so I think that's okay. So again, let me know what you guys think of the stock, and I will see you in the next one.